An official U.S. gold revaluation has gone mainstream. As of filming today, October 1st, 2025, gold is up 48.5% year to date, almost 50%, banging on the door of $4,000 an ounce. But this is just the beginning. The U.S. currently has the largest gold reserves, assuming they're all there. And if they were to revalue them just to spot price, they would be worth over $1 trillion. But there are no rules here. The U.S. has revalued gold before, and they can set the price at whatever they want. And momentum is building that they are gearing up to do so. Hi everyone, I'm Taylor Kenny with ITM Trading. I promised you that if I saw any new news about a gold revaluation, I would bring it to you straight away. And we have a lot to get into today because this impacts not only gold, but the value of your dollars, as well as the entire monetary system as we know it. Let's get into it. In case you missed it this week, Bloomberg, yes, global legacy media company Bloomberg, reported on an official U.S. gold revaluation, citing the U.S. Treasury's gold reserves have surpassed $1 trillion in value, more than 90 times what's stated on the government's balance sheet. This is because the current U.S. gold reserves are valued at $42.22 an ounce, last set in 1973. So if the U.S. were to revalue gold just to current day spot prices, well, $1 trillion would be added instantly to the balance sheet. But we're going to talk about why the revaluation price could actually be much higher than spot in just a second. But first, I still see so many people in the comments going, gold revaluation, that will never happen here in the United States. But the thing is, it already has. Back in 1933, President Roosevelt confiscated gold bullion. Rare and collectible coins were exempt, which is why it's so important to make sure you work with someone you trust when you purchase your gold, that you understand the different types. But what he did was, once he had all the gold, well, he turned around and revalued it from $20.67 an ounce to $35 an ounce. Well, what did that mean? It meant that the United States came out on top. They were rich as could be. But all the American citizens, those who held their wealth in dollars, in paper promises, in the fiat currency that was never theirs to begin with, right? It's all smoke and mirrors. They lost over half of their wealth overnight, and there was nothing they could do about it. That is a lesson learned, and something that's very important, because there's a misunderstanding when we talk about this revaluation that it will somehow solve all of the United States problems. That is not what I am suggesting, and anyone who is suggesting that doesn't understand how bad things really are today and what history shows us about a gold revaluation. Anyone who has gold before the official revaluation happens, they are going to come out the other side better and stronger and in a position of opportunity. But anyone who is not protected with gold, especially if they choose to revalue well over spot price, well, this is going to have significant implications for the dollar. See, right now, the dollar is the global reserve currency, meaning it is really at the center of the entire global monetary system, but its days are numbered. Now, in order to preserve that position of power that the United States has benefited from tremendously, there really can't be any competition. And anytime gold prices start to rise, well, it's typically viewed as a threat to the dollar. It's not in the United States' best interest to have gold prices rise, which is why many have speculated that gold prices have been suppressed for decades. And you might be sitting out there wondering, suppressed? How does that work? Isn't it simple supply and demand? But it's not that simple. The COMEX, the New York Commodity Exchange, and the LBMA, the London Bullion Market Association, well, they rehypothecate gold, meaning that they can have multiple claims on a single piece of gold, right? All of these paper claims. That makes it seem like there is a far larger supply. If you have 100 claims on one piece of gold, right? A much larger supply of gold. And that the demand is there, but the gold supply is there to match it, when in reality, there's not as much gold as people think. So this whole scheme works totally fine until one day someone demands delivery. And then more people demand delivery. And then suddenly, there's not enough gold. This is something we saw last year, right, or at the beginning of this year, when the LBMA effectively had a gold run on their reserves because there was too much demand for delivery. And this is institutional buyers, central banks, and big players we're talking about here who are demanding their physical gold. Why? Why are they doing that? Well, it's twofold, right? One, is because they understand that the dollar is in decline and that this is a process that cannot be stopped. Maybe it can be slowed a little, but honestly, if you ask me, it's accelerating, and they understand this. So as the dollar continues to decline, well, what is going to replace it? Historically, we've always said, well, there's no other currency that can replace the dollar, which is still true today, right? There is no other currency that comes close. But as trust in fiat currencies around the world break down, what are nations turning to? They're turning to something they can trust, a physical asset that has withstood the test of time for thousands of years. We are talking about gold. But it has to be physical. It has to be the real deal, because it's always those who control the underlying asset, the true store of value, that are going to be in positions of power and can do whatever they want, whether it's the COMEX and the LBMA potentially manipulating gold prices, or whether it's a nation or a central bank revaluing its gold reserves. The same applies to you out there watching, right? You and I. In our positions, if we don't physically own our own gold, if we just have a paper promise, that promise is only as good as the other person to deliver on it and any intermediary in between, right? It is not a sure thing. And when we are talking about the type of crisis that is coming, that is brewing right now, you want to make sure that you are protected with the sure thing, with a true insurance policy, which, again, in my opinion, is physical gold. But back to the revaluation. Now, many others out there have said, okay, well, 1933 was a long time ago. What about modern day? And guess what? The Federal Reserve is absolutely thinking along the same lines. In fact, they released a research note earlier this year where Germany, Italy, and South Africa were all studied because they have taken the decision to revalue their reserves in recent decades. Why do you think the Fed created this study? Do you think that they're just researching things out here for fun? No, absolutely not. They are actively pursuing the next steps in a gold revaluation and what that will look like for the U.S. And for anyone out there who says, okay, so let's say that the U.S. revalues to spot price. Well, what is that? $1 trillion? It's a drop in the bucket when we're looking at $37 trillion in debt. But any reprieve right now would be helpful. That being said, I mentioned at the start of this video, there are no rules. In fact, most analysts and experts now are saying that if the U.S. is going to do a big swing like this, they probably will go significantly over spot price, right? They're going to get more bang for their buck. But the reality is this is a dangerous move for the U.S. because it, again, is a direct threat to the dollar. If the United States were to officially revalue its gold, it might buy time, it might help us get out of this debt mess, but at the same time, it's going to cause a lot of questions and concerns around the U.S. fiscal ability. It's going to create volatility, right, in our markets with the Fed. Who knows the implications of this, especially when we're talking about the U.S. versus Germany, Italy, and South Africa. The U.S. is in a unique position, but it is that very unique position, that position of power, that might just let us get away with it once again, right? And if that were to happen, what does that mean for you and your gold and your dollars? Well, again, anyone who's holding gold before the revaluation, they're going to come out the other side on top because it effectively will create a new floor. Let's say that they revalue at 10,000, 20,000, 50,000 an ounce, whatever it might be. That's really going to be the new floor for gold. We know, again, that gold is severely undervalued. Even as it's closing in at 4,000 all-time highs, its value is far greater, which is why central banks are buying it at record quantities. They're buying it like it's cheap because it is. But this move would escalate the global shift away from the dollar and towards gold, meaning that it will further accelerate the de-dollarization efforts by other nations, as well as repositioning gold at the center of the system. But what does that mean for the dollar? Well, it's going to end dollar dominance, which means that we could expect to see rates go sky high. Consumer prices go sky high and our standard of living significantly decline, right? We are talking about inflation, the likes of which we have not seen yet. And again, during this period of time, the only people who are really, truly going to be protected are those who are outside of their system with physical gold. And again, as far as timeline goes, we don't know when this revaluation would take place, but I don't want to leave it to chance, and I would suggest you don't either. Again, in 1933, in the 1970s, you always look back in hindsight and think, I wish I had acted then when I had the chance to. That is what is going on today, right? It is time to make sure you are protected now before this next stage happens, because I don't know how high gold will go, but you want to make sure you're in a position beforehand so you're protected against how low the dollar is going to go, right? Your dollars will be buying far less per dollar. That's how this is going to play out. And if you have any questions about any of this, or you are looking to get protected with physical gold and silver, you can always call us at the number below. You can scan the QR code, or you can click the link in the description. Whatever is easiest for you, talk to one of our expert analysts. They have years of experience in helping people just like you with all of this, preparing for what is coming next with physical gold and silver. And if you want to learn more about gold and silver and their different functions and their different types, we have a free ITM gold and silver guide. You can download your copy today by scanning the QR code or clicking the link in the description below. Either way, get your copy. Again, it's completely free. Better to have it now and not need it later. Tons of great information in there. It's a great place to start. And as always, I so appreciate you being here with me today. I'm Taylor Kenny with ITM Trading, your trusted source for all things gold, silver, and lifelong wealth protection. Until next time.